Wow. You think it's hot in Mexico? You should see how hot tomorrow's inflation report is going to be. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on Monday, September 13th, which may seem like a ho-hum, not so exciting or interesting day in the financial markets, but there's always something happening. And today we'll read between the lines a little bit. One of the things I used to enjoy doing while I was sitting on my option post on the New York Stock Exchange and had that part on autopilot. So I'd read Austrian economics and gold and silver all day. Silver, as you can see today, well, I think it's a little higher than 24.57 now. Really, in today's financial environment where information flows at different speeds, depending on which price feed you check, can make a world of difference. Although we'll dig into that and more. Thank you to Summa Silver and my dear friend Galen McNamara, who runs Summa Silver. And again, it's up to you to decide what is right for you. But I mean, maybe we'll compare Galen and silver against the Fed, CNBC, inflation, and misleading headlines. So let's get right to it. I know there's a lot going on, so we'll keep this one as quick as possible. I know the markets are bracing for hot and fuego. Wow. You think it's hot in Mexico? You should see how hot tomorrow's inflation report is going to be, according to the markets, in the week ahead. So let's get to the key points in the words of CNBC and Patty Dom, because if the CPI is hotter than expected, if there's a little more in fuego than you were anticipating, strategists, whoever they might be, I mean, it could be Jeff Curry from Goldman Sachs, given the ownership structure of the corporate media and some of these financial institutions, that say it could be a catalyst to move the Fed to considering tapering back its bond purchases sooner rather than later, which I thought was interesting, the way on the surface of it, given the massive bubble and how the Fed has ignored inflation really as far back as Bernanke, or since before the Fed was invented, if you want to take it that far back. But yet a couple of weeks ago, it was all of a sudden, the Fed's going to taper, the Fed's going to taper. Goldman Sachs says the Fed's going to taper, and we know they're never wrong. We also know they don't commit felonies, don't lie, cheat, or steal. So if you want to take their opinion, they do have a track record. So anyway, now they're thinking about moving even sooner. I'd heard November, and I don't think there's a Fed meeting in October. Now, you couldn't have the Fed crash this thing as soon as next, is it next week, I believe. Let's see, we're the 13th today. I believe so that'd be next week. On my birthday, the 20th, maybe they party with the silver guys on the 20th, and the meeting's the 21st to 22nd, but anyway, there is also a key retail sales report, which is expected to show a slowdown in spending, and that could trigger more worries about the twin threats of a slower economy while inflation picks up. Thank goodness these folks are going to break down the new normal transitory state of inflation, because it's a little confusing for me to see just on first glance. So let's take the time. Investors paying close attention. Consumer price index will be the big one in the coming week. That much I would agree with. It will be a big one. I mean, relative to what? I mean, we're getting 5% plus every month now. Let's keep going. Latest snapshot of the economy. I mean, this is the August report. We're in September, so that means that's a month delayed. And when it gets released, CNBC already has the article written. So that means they get it before you and I do. And if the Fed has been looking at this data before you and I did, and then Fed Kaplan and Rosengun were selling their tech shares in the middle of it, leaves a lot of unanswered timeline questions, which I'm sure Ross Benham will be calling back with transparent answers soon. But after that meeting, the Fed is expected to discuss more detail. Oh, wait a second. They weren't talking about the report. Snapshot comes just a week before the Fed's important September meeting. Who's deciding it's important? CNBC, owned by the same people that own the Fed. Maybe that's how they knew at that meeting the Fed is expected to discuss more details about its plan to taper its bond buying program or quantitative easing. Hard to tell the difference between the two sometimes. Market professionals say hotter. Excuse me 1 second, please. I'm getting hot just reading this report. You know how silver nerds can be. The market professionals say hotter inflation reading could speed up Fed's plans to slow down the 120 billion a month. And they must have started inside an igloo to get to this rip-roaring pace, but the paring back of its asset purchase program be the Fed's first major step away from its easy policy it put in place to combat the pandemic, or really since Lehman blew up 10, 12 years ago, 13 years ago, whatever it was. Consumer price index is expected Tuesday. What are they not sure they're going to send it out? And there's a retail sales data is released Thursday. Now let's be clear that nobody, please don't look at this, listen to what I'm about to say, or tell anyone that at 2 p.m. on Monday, which is when I'm reading this today, there's a federal budget statement, which definitely isn't as important as Oracle's earnings, because you can click on that. CPI, also an important, consumer sentiment, not important. Definitely do not go write down a note. I'll wait, but don't write down a note or open another browser so you look at what that could be. Then that September 15th date, Janet Yellen put in one of her press releases, hit the subscribe button if you want to hear Yara and the other folks dig into that later. Anyway, let's get back to this. So it's expected Tuesday. We'll see if it comes out. Expected to show consumer prices jumped at 5.3% pace in August, according to a consensus estimate from FactSet. I wonder who they could be. Let's search DuckDuckGo for FactSet. It was interesting, a week or so ago, we found that we did that Sunday show where you saw the unusual silver price being up 11%, then it was retracted. Although Reuters actually told me where they get their data from. I'd never heard of them before. Maybe you got to be in Goldman or JP Morgan to know about stuff like this. FactSet, so we can keep an eye on that data. And the reason I mentioned that, well, consumer continued to pull back from high spending levels of earlier in this year. That could be a problem for the tech shares that are getting clobbered as we speak. Well, Fed insiders like Rosengrun and Kaplan are selling, but this way is what this reminded me of, the expected number. So it's like, let's say a company has $1 in earnings per share. Is that good or not good? Well, if the expected number was $1.50, you might see a sell-off. If the expected number was 50 cents and the dollar beat that, you might see a rally. Where does the expected number come from? I will leave you to mull that one over subconsciously, because this CPI is so hot, I can't. Got to wrap this up before the ice melts here in Mexico. Behave. Hot CPI. If the CPI is even hotter than expected, so they're expecting 5.3%. So just in the rare chance that it's even hotter than that, it could make the difference between a September announcement for tapering or waiting to November. According to Peter Bachvar, I guess, at least in his mind, and I know he's chief investment officer of Bleakley Advisory Group, at least according to this, seems as if some market participants have priced it in as 100% now by November. And if you should happen to beat the expectation, which could be possible, they're not always perfect, they could even be tapering next week. Wow, that is exciting. And I found bond yield put spreads that trade at an even money credit. So as you can see, I will wrap this up. Economists expect CPI to rise at 0.4% month over month. Sounds small when you do it month over month. Although that report comes after August producer price index, which was released Friday, showed a jump of 8.3% year over year. Now, they don't really talk about the PPI as much because they like the CPI, but for the consumer goods, you know, the people who make those, they, you know, for example, let's say you were talking about a semiconductor stock. You know, they sell their semiconductors to Oracle or whoever, but, you know, they have raw material inputs that, you know, like plastic, They got to fund the cafeteria, so food prices in there. Plus, I've heard semiconductor chips require silver. So if silver were actually in a shortage, but you had a bunch of bankers that report. So actually admit that they were really close to running out of silver back in February. The same banks that sent Jeff Curry out to say, well, it's possible for a short squeeze. But then later on, not only did his friends at the London Bullion Market Association reveal that they were scared, fears emerged in their own words because they were weeks away from running out of silver. But then a month or so after that, they showed the numbers were wrong, meaning that the amount that I said never could have been added, David Morgan, Rob Keens, everyone else on the show, they saw it too. It took the LBMA months later yet. I haven't gotten any clarification there. So just an example of how in that scenario, silver would have been the raw material that the producers were paying for. So if that price goes up, and here you can see in the Fed zone ridiculous numbers, it's up 8.3%. So there's a chance that could filter through. I mean, hey, we don't even know if the number is definitely going to come out tomorrow. Anything could happen, but just that maybe it will turn out to be transitory. Who knows? But the Fed's formal announcement about tapering its bond buying program. The Fed's formal announcement, it's already formal. Reminds me of when it was already formal back in 2018 that they were only going to taper down to 2.5–3 trillion over the next 3 to 4 years. Interesting timeline. Could be if the fix was in, maybe I could figure out a way to reconcile all this, but let's see here. All right. So the Fed's formal announcement of tapering bond buying program, also called QE, stands for quantitative easing, in case you didn't know, is widely expected in November or December. Wow, the formal announcement about tapering is widely expected in November or December. That's not true. It would crash the stock market. I mean, really, you couldn't really conceivably do something like that until after the reset was announced, unless that means the reset's coming before then. But then what happens if, here's Peter back here saying September, which is before November. So a lot of inconsistencies in some of these mainstream financial articles. Many of those who expected a September announcement pushed back their time frame later in the year after the labor report. 235,000, about 500,000 less than expected. They weren't even close. Maybe we could get Tricky Dick Nixon. I have this silver coin. We could get him to read tomorrow's CPI report. Be kind of like one of my other favorites, Lyndon Baines Johnson, who took the silver out of the quarters because that guns and butters Vietnam thing. But we'll stay focused. Certainly the trend has been for the inflation number to come in above expectations. I would agree. I think if that happens again, it will feed the narrative that inflation is going to stick. It might be so obvious even Powell would notice. Obviously, it's an issue for the bond market if it's viewed at all as accelerating the timeline of the QE tapering or accelerating the timing of the first rate hike. Whoa! This would be a negative for stocks. That would be a negative for stocks. Let's be careful with our nomenclature. But I would still agree that would be a negative for stocks. All right. If the markets have an inflation mutiny, by the way, September 19th, International Talk Like a Pirate Day, just saying. And there's volatility as a result. Please don't look at my VIX and VIXY trades I posted on Twitter. Please. They could move it up to September. Donovan said of the Fed's taper announcement. Now, I've not heard of him before. He wasn't specifically mentioned in that article about how many of the Fed Reserve governors were selling their tech shares ahead of all of this. So we don't know what side he's on. There could be a good guy or two in the office, but I think there's kind of a 1 in 4 likelihood in my view. That sounds okay. Maybe I'll take the under, maybe the over, who knows? Stagflation. Wow, we're talking about stagflation in 2021. I thought that was something around the time of the Hunt brothers when silver reached 50. Could have gone higher had the COMEX and CFTC not changed the rules. It's guy Paul Sarnoff says they actually raised margins on the contracts from 1,000. They didn't get up to 8,000. I was bluffing. They did. They actually got up to 75,000. I don't know if they specifically hit 8,000, but they were just raising it so quickly until, they basically broke the price. Interesting to think what it could have gone to. But the combination of higher inflation, lower spending, spurred talk of the threat of stagflation. Those worries have also increased as economists ratchet growth forecasts to a still high level, just above 5% from above 6%. Numbers are getting out of control, just like the US printing press or digital press. I'm more about the inflation side of it than the stag. Okay, you said slowdown in consumer spending after stimulus checks had boosted retail sales is not surprising. May just be a short-term warning. Does that mean that they're going to attempt to print more money? The debt ceiling is also coming up, a lot going on. Explosive growth retail sales year early as a direct result of stimulus, and it's really settling down now. What's that going to do to the stock market if the Fed's really going to taper at the same time? There was an enormous amount of liquidity and saving, extra amount, blah, blah. What does Barclays, blah, blah, blah say? He expects the CPI report to show that inflation is peaking, just as the Fed had said. I mean, let's be fair. Here, June 16th, Fed Powell, he even had the data before anyone, hopefully even before the Goldman Sachs and JP Morgan trading desks. Wonder if he knows Jeff. But here, even June 16th, he was saying it was transitory. We're now in September. I think that's 3 months later.
Initial thoughts on this. Gary Kaufbaum's with us.
Risks to the economy remain. Okay, so I thought the risks to the economy were also taken care of. Maybe he was wrong about that. So anyway, as you can see, Michael Gappin is kind of basing his expectations, which I believe is what CNBC is polling, the bankers' expectations, which is based on the Fed's expectations, which have been as wrong this year as they were when Ben Bernanke was in office. But the slowing trend is just not an issue for consumer spending. It's showing up in spending and housing. Now, housing is one of those things they strip out of the headline CPI number so that you don't really realize how fast things are going up in price. Although, as you can see here, home prices rose 24% last year. Now, this was 2 months ago. I'll have to wait till tomorrow for an update on that. Third quarter growth may be slower than expected. I guess the economy is not as hot. These are bottlenecks that are kind of constraining the pace of the recovery. Demand isn't the problem right now. Supply is. So again, those supply chain issues. Sure. Now, you've heard Andy Schechtman talk about supply chain issues in silver, and then you saw what happened that the LBMA was so scared about early February. So, maybe he was right. Maybe something else, but who knows? This guy expects higher prices and shortages to continue even into next year as supply chains keep getting disrupted. Because some companies like PPG and General Electric have already commented how they see issues with supply stretching into 2022. Now, General Electric, I know there's this big go green thing, which requires a lot of silver. So they're probably out of plastic. That must be what they can't find. Sure, they have plenty of silver. Maybe they took the silver and that's why the banks were worried. Who knows? Stocks were lower this week. Number of strategists expect to see the stock market pull back during this. What did they get advance word from Kaplan and Rosengren that they were selling? Although here, at least to be fair, we are up over 30%. Now, this should have been, we were up over 30%. Again, depending on where the punctuation, a comma here, an apostrophe there, can really change. The headline will look the same, and it's not outright lying, but can, if done intentionally, you could give someone an impression that's not really in their best interest. So they were up 30% in 2019, over 18% last year, over 21% in the first 3 months of this year. Started right around the time of the Fed swap line, especially if you look at this chart of any tech shares. And even this guy's saying these are unsustainable rates, and our takeaway, it's going to get tougher from here. Valuations are somewhat extended, and blah, 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 framework going to get less friendly. Wow. Now, Donna Bedian said it would be important to watch discussions in Congress as it begins to put details around the infrastructure spending and what type of increases they're going to start to fill in the blanks. Although what he did not mention is that even Joe Manchin, a Democrat, seems to have turned sides, and he's doing his best to block the budget deal. I can't imagine he'll like the current proposal for raising the debt ceiling, although half of Congress, I believe, is still on vacation. So they're kind of leaving that to the deadline. Just the last few things to wrap up here, just as some references to show the data. Here is July from the BLS of labor statistics, 5.4%. Here, I wanted to find June. Let's see, consumer price jumped by 5.4%. Wow. Now we saw even Jamie Dimon thought the inflation spike wasn't transitory, and there's inflation. Home price is 24%. May hits 5%. How will 5% inflation affect the silver market? That's an interesting question. Producer prices, we saw that one. Okay, and top earning New Yorkers could face 61.2% combined tax rate. Californians up to 59%. That sounds pretty inflationary. That Gavin Newsom, I know he's got a big day coming up on September 15th, the day that I would say about a week or a month from now, or even yesterday, I could document will be the day that the US, well, they might not tell their own constituents right away, but I would pick, if we were doing a box pool, I would pick September 15th as the official day. Oh, that's 2 days from now. September 14th, there's a big meeting with Gavin in California, because I hear they're recounting some votes of some election. Then the 15th is the date that pops up in Janet Yellen's latest Treasury letterhead letter about the debt ceiling. So either case seems like some inflationary inflation in the tax rates, which, you know, it probably is not counted in CPI, but it's over 50% now they're proposing. So I would say at least worthy of mentioning. And here are the major issues and deadlines facing Congress as lawmakers return to Washington. What do you mean return to Washington? Janet Yellen said the debt ceiling was the biggest thing ever. And they're on vacation. It doesn't look good there. We'll let you read that on your own. Here is June 16th predicting transitory, which doesn't seem as transitory now. Here's Ben Bernanke, and because in retrospect, Chairman Bernanke's 2011 call for inflation to be transitory was absolutely correct. All right, well, let's check. Maybe he's right. Let's check the data. Well, at least I know I did. Now, in fairness, I did read an article that the Fed doesn't consider monetary expansion any sort of relevant metric on inflation. So judging by the balance sheet, you would think that it has gone higher since 2011 was at 2 and change. Here we are over at 8. Anyway, I know there's a lot to think about. Don't watch that again if you're confused and have questions. I was being a little silly today. I mean, rather than being upset about some of the things that happen, sometimes maybe it's more fun to giggle about them, realize it's all a stacked deck. These things have been planned a long time ago. And once you start to get the hang of how to read through some of these headlines, it becomes a lot more clear. So again, I'd like to thank my dear friend Galen McNamara. Wow, busy couple months. Well, the CFTC has been preparing the transition away from LIBOR, even a press release on their statement signed by Rosti himself. Here's Summa Silver samples extensive silver and gold mineralization at Hughes property. Identifies multiple number 4 drilled targets, increases the size, then drills 11,992 grams per ton. Wow, look at Galen going all Babe Ruth calling his shot. But unlike some of the Fed governors, at least he did it in the public, transparent fashion that at least I as a shareholder appreciate. Then they identified new undrilled anomalies in soil survey on Hughes property at Tonopah. And just today, Summa Silver receives a drill permit and prepares. Where's the, there we go. For immediate drilling at the high-grade silver gold Mongolian property in New Mexico. There are the key highlights, 598 grams per ton silver equivalent on this one. And of course, you can go to summasilver.com, go right up there into the contact tab, and you can find out how to get your questions answered. Have your financial advisor call if it's something of interest to you. I do not have the license credentials of Rusty Benham or Jerome Powell Bernanke, so I'm just the silver inflation guy, you know. So with that said, I sure do love you all. Good things are coming. Hope you're enjoying today's silver rally. And for more action, there's another video coming your way now.